Another $12 million home sold in Monarch Bay and Dana Point, and this one will likely reshape how developers approach the neighborhood. We've got falling inventory, rising demand, and a Fed chair that continues to confuse the market. Let's jump in. 126 Monarch Bay Drive just sold for $12 million. This is a beautiful 5,400 square foot home on 11,000 square foot lot towards the middle or back of Monarch Bay, which, why is that so important that this got $12 million? Well, this sale, plus one from 2 weeks ago that sold for $15 million that didn't have an ocean view, are unique sales in Monarch Bay because historically there's really been two markets in Monarch Bay. Homes on the interior with ocean views selling for $10 million. There's been a lot of those. And then homes on the bluffs selling for 20 or above. And so to have a mid-teen sale gives developers, flippers, or home builders coming into the neighborhood an opportunity to say, hey, look, there are competitive sales that can sell inside the neighborhood between 12 and $18 million if you build a really nice home. Now we have comps. So likely what we're going to see in the next couple years is we're going to see just that. Speculators coming in and saying, hey, I'll buy this home that's run down for $7 to $8 million and I'm going to build a beautiful $17 million home on it. You keep me accountable though. Let me know in the next couple years if that happens, but I would bet that that starts to happen here very soon. Let's break down the numbers that matter here in the beach cities. Again, we've defined that as Dana Point, San Clemente, Laguna Niguel, and San Juan Capistrano. Just this week, our inventory fell by another 18 homes down to 430 active listings across all price points here in the beach cities. If you're looking for a home to buy, you have 430 choices right now. But demand, which we define as homes in escrow, they currently have contracts on it, rose by 8 homes to 185 properties currently in escrow. And this again is abnormal. This is not a normal fall market where we usually see inventory and demand trend down towards the end of the year and then start up again in January. This year is very unique, and why that matters is because I expect it's going to have an even bigger impact in the spring. So when the spring market lights on fire and more buyers rush into the market, we're going to have less inventory most likely in 2026 than we had in 2025, and we're going to see a bit more of a competitive market. Again, though, the competition is really starting now. The average dollars per square foot went up this week. The last 30 days, we've now averaged $903 per square foot here in beach cities with an average of 40 days on market. So days on market has come down to just 40 days on sold properties. Now, this is a key distinction here because active properties right now has an average of 80 days on market. So again, it's the tale of two markets where you have sellers that are motivated and say, let's price it where the market is. Those homes are selling really well and moving with an average of 40 days. Aspirational sellers, however, that are trying to beat the last sale and price above what their neighbors' homes have sold for are sitting much longer on the market. So with the affordability issues related to interest rates, the buyers are very price and interest rate sensitive right now. And so again, the homes that are priced correctly are selling right away. The homes that are priced aspirationally, however, are sitting a bit longer. So with affordability, let's talk about mortgage rates and the Fed and what's happened this week. We had our Fed week. We got our 0.25% interest rate deduction to the Fed rate. However, that was expected by the bond market and already priced into the mortgage rate percentage, which was sitting at 6.13 right before the announcement. The rest of the markets were really paying attention to Jerome Powell's speech, which too late Powell did what he did best and added confusion when he said
a further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Were his words, which leads us to think we may not get the cut that were expected. He says that we don't have the data right now to support it. Powell kept citing that we just don't have enough data to know that that's going to be a thing that we're really going to get the cut in December that we all expect. And he blamed largely not having the data to support it, which further confuses the market because we're in a government shutdown and we're not getting the reporting we would normally get. But I want to know what you think. Are we experiencing job loss and job uncertainty right now, or are we more at risk of experiencing further inflation if he reduces the rate? Drop a comment below. Let me know which side you're on. I'd love to get a poll going here. Additionally related to the Fed, Scott Bessent released 5 names that he gave to Donald Trump as potential next Fed chairs. And why this is important goes back to the comments after the Fed announcements. That market relies heavily on the conversation from the Fed chair to shape what is going to be happening in the next several months and understand economically where are we as a country. Now, it's not as if the next Fed president can come in and say, hey, rates are now 3% and I'm in control, because again, he has to have the majority vote from all of the Fed members. But just this week, we saw how powerful Jerome Powell's speech is when mortgage rates, even though we had a reduction in the Fed rate, actually went up after his speech. Now they've settled back down a little bit and probably are going to continue that trend, but it does mean a lot when you have a Fed president that has a forward hawkish looking view and continues to say that we need restrictive policy to make sure that we keep inflation in check. Okay, this week I want to do a case study on Opendoor. Opendoor is a tech company that's come in and said, let's use our algorithms to price real estate and let's buy and flip real estate, buy it direct from the seller and put it back on the market. In February of this year, Opendoor bought 30391 Benicia in Laguna Niguel, and they paid $1,647,000 for it. They immediately relisted it for $1.735 and then finally just sold this week for $1.334 million. So I estimate between the reduction in price and the holding cost, Opendoor probably lost about $500,000 flipping this house here in Laguna Niguel. And why is that important? You might ask, well, I think it's important for us to realize that when we look to online automated valuations, well, they're a fun tool to track and can give us some good data. In our market where there's so many nuances that determine the value from your homes to the home across the street from it, it's important that we do a customized valuation and really take the time to understand the entire market, not just what has sold recently in the last few months around us, what dollars per foot they got versus what size house I have. You really have to dig in and do your full homework to make sure that you're nailing the exact right listing price to make sure that your home sells for the optimum value. Where Opendoor thought it would sell for $1,735, they were way off and lost a lot of money from it. This is really a sunsetting trend where we've seen tech companies try and bring money in to disrupt the real estate market and get control of the listings. Again, it's probably a thing of the past as we see the last several homes selling and they don't seem to be buying nearly as many homes here in our market, and I understand why. This week's deal of the week is 408 Camino San Clemente. This is one of our right guy listings. It's a absolutely incredible 2-bedroom, 2-bath, single family attached home in Colony Cove in San Clemente. It's a 55 plus and it has a stunning ocean view where you can see Catalina Island and blue ocean from every room of the house. If you are interested in it at all, let me know as soon as possible because it's already getting a ton of attention and I don't think this thing's gonna last even until the end of the week. It will probably be in escrow already. We're listing it at $1,195,000. Check it out. Let me know what you think. And again, if you want to get a tour of it, reach out to me as soon as possible. That's a wrap on this week's Beach Cities real estate market update. Inventory is falling, demand is rising, the market is responding in real time. And if you want to stay ahead of these numbers and stay informed with us, click subscribe, share this with a friend. If you have any questions on how to win in this real estate market, reach out to me. I can't wait to see you next week.